Hello traders, today is the 6th of April. My name is Neville Hornsey, market analyst YouTrading, and today I'm looking at the pound versus the yen. It's going to be quite a quiet day today because everyone's waiting for the FOMC meeting minutes to be released tonight. However, if we look at the Forex heat map on YouTrading.com, we can see that the pound, along with the sort of antipodeans, the Aussie and the New Zealand dollar, are strong today. So looking across here, we've got the yen and the Swiss franc looking like the weakest. So it moves out of the safe havens into the sort of more riskier assets, and the pound is doing particularly well today. So go long pound, short yen should be a good trade. Looking at the economic calendar, there's not a lot on today. As I said, FOMC meeting minutes is the sort of main focus. We did have UK construction PMI, which came in as the previous reading, so 59.1, which beat the forecast of 58 today. So construction is doing relatively well in the UK. There was complaints about rising wages, inflation pressures and things like that, bottlenecks in supply chains. So for it to come in as previous is good for the UK. Going straight to the actual chart now for the pound versus the yen. We'll go back to a daily chart. So squish it back. We can see that the 20, the 50 and the 200 EMAs on this daily chart are all pointing up. They're stacked bullishly. The MACD is came down towards the signal line, but is now looking like there's going to be a bit more divergence between the moving average. So at the moment, momentum to the upside. Price action, we had a sort of double top sort of form around February and from January. So the start of the year, double top was resistance around 158. Then we had a big pullback down through the 200 period moving average, took out this swing low here. So a possible change in trend. That didn't materialize. We took out the liquidity above the double top, big impulsive move from the 22nd of March. And now we kind of had a sort of rally base, and now we're looking for another rally, take out the swing high from the 27th of March. So if we go back to February the 24th, that's kind of when the Ukraine situation happened. So that was like the catalyst, if you like, to the downside. Since then, the pound versus the yen has done a lot better. So looking for continuation to the upside, price action to start making higher highs, higher swing lows. So we put the fractals on. We can see that we've got low here, 8th of March, fractal high here, 27th of March, a fractal low, but a higher low on the 29th of March. And now we're just sort of waiting to see that trend continue. So looking for longs today. Going to an hourly. We said that the heat map says we should go long. If we look now, we've got the London session breakout. So the London breakout, sorry, of the Asia-Pac session. So here's the start of the sort of new session from 12 midnight today. Then we had a range, low liquidity, low volume. And then we had a breakout at 10 a.m. candle. Now, this candle here has just tested the high of the 9 o'clock candle. As long as we don't go below this swing low here from the London open candle, then we should be looking for a long. And if we go long straight away, we would be looking for a risk of 1 to 2. So just assume that price gets back down there. Just move that there. And our stop would go below this swing low here. So we're looking for a risk reward ratio of 1 to 2. So if we push that up here, so 163.6, if we were to get a retest of the Asia-Pac session high, that line here, this red line here is the previous day's high. And then this red line here is the sort of previous but 2 days high. So this is the 4th, this is the 5th, and currently we're obviously making higher highs, higher lows. So any pullback into an hourly high here, if we see the 10 o'clock candle pull back into the 8 o'clock high. So I'm expecting this pound versus the yen to go higher from now on. Risk, obviously, below the 50 EMA on this hourly, below a swing low, below the Asia-Pac session lows. And like I said, a risk reward ratio of 1 to 2 takes us up towards 163.6. 163.5 would be a good target, and before the 164. Right, if we look to the left on the daily, that doesn't take us above this swing high here. So assuming that we get into a trend, if you were to take say multiple lots position, you could close out at a risk to reward ratio of 1 to 2, and then just let the rest of the sort of trade run, and that would give you a risk to reward ratio of 3.38 if you were to target the liquidity above this swing high here. So all in all, quite a good trade. Momentum to the upside, price action to the upside, sentiment is to the upside. If we just look at, when I say sentiment, the contrarian sentiment, so all of the yen crosses that I follow, so all the way down to the New Zealand dollar versus the yen here, 24% of traders are trying to go long, 76% are trying to go short the New Zealand dollar. So that's long yen, short New Zealand dollar. The widest sort of disparity, if you like, is the dollar versus the yen. 91% of traders are trying to go short that. And like you see, that's continuing to make higher highs and higher lows as well. So yen is, well, if you're trading the yen and you're trying to go long the yen, you're absolutely getting squeezed out your positions. I'd imagine your stops are above these daily highs from the 27th of March. And that's what I'll be targeting overall. So that risk reward ratio of 3.38 seems quite reasonable. All right, good luck today, and I'll speak to you again tomorrow.